Thanks for listening to episode 121 of the Oklahoma Real Estate Show. If you're thinking about buying or selling in Oklahoma City or the surrounding area, there is a link below to begin your search and get in contact with me. If you've got some ugly ducklings in your portfolio and you need to sell them, I am the agent for you. You can get in touch with me in the description down below or visit oklahomarealestateshow.com. Welcome to episode 121 of the Oklahoma Real Estate Show. On today's show, an investor that has grown his portfolio just like we all want to do, and many of you have already done, and now he's on the backside looking to make his investments more efficient. But first, he's going to tell you a little bit of his story and how he got where he got.
Thanks so much. Thanks for having me. So you want a quick background, like who I am, what do I do, like what's my story, why listen to me?
That's right.
So we're actually, I would call it state neighbors. I'm from Arkansas. And so we have very similar markets, very similar climates, and I think some very similar state laws. And I actually used real estate as a bridge to escape my day job. I was in corporate America. I was an engineer by training and worked my way up the ladder. Realized my ladder was against the wrong wall. 15 years into that climb, I'm like, I've got to do something different. So I just kind of had this wake-up call moment where I was like, you know what, I am not living up to my potential. So I used real estate as a way to basically replace my income. So I call it pile. Your passive income exceeds your living expenses. So I kind of went on this mission towards finding and acquiring enough rental properties so that I had enough income from my rental properties to live a comfortable lifestyle. I'm not jetting around in private planes or anything. I'm not going to exotic vacations to the Azores, but I'm comfortable and I'm able to live a very, very reasonable, a normal life, but it bought my time back to then do other things. And so on the topic of you've built your portfolio, as of now, I have about 40 rentals, and it got into the cycle of both my life of where I wanted to be and kind of the season of the market where it was getting harder and harder to buy houses. And I just kind of revisited how I was going to look at my business. And I like the way you put it. I'm on the back half. I kind of had reached mount enough and I didn't need to build another 100 unit portfolio if I didn't want to. So I then thought about, well, let's optimize this existing portfolio so that I'm getting the most bang from that with the minimum amount of output. And so some things that kind of went through my mind going through that is, okay, let's kind of interrogate for a second, what is taking up most of my time? And so I kind of had this concept of having a punch list of my 40 properties. And at the time, it was probably like 50 properties. So I was like, okay, of these 50 properties, which of them is giving me the most heartache? Which of them is has the worst tenants for whatever reason, just doesn't ever perform? The turnover is just constant, or I don't have enough, or I have a lot of equity in one of those properties. So I kind of created this rubric of looking through my portfolio through that lens, where I could, if I were to sacrifice this property, sell it off, I might be able to put $25,000 or more in my back pocket and get rid of a problem at the same time. And I felt like that was a good trade-off for my time and energy, so I could then reinvest that $25,000 or just keep the $25,000 in cash and wait for other opportunities.
And how did you go through that process of selecting which ones weren't performing as well?
So if you're like most investors, your bookkeeping is not the best, and you don't really know what property is making what. But I had the wisdom, or I learned the lesson the hard way to find a good bookkeeper, and not just somebody who would like do books, but like somebody who was a former controller and he really had her experience down. I found her through Upwork. Interviewed, I think, like 50 people, and then I took 50 applications. I took 3 interviews. All three of them were probably pretty good, and the one really bubbled up to the top as someone who was just fantastic. And she has actually gone on to be the bookkeeper for several of my friends here in town because I talked about her so much. So basically, she put everything in classes, and she boiled down my information that I can get reports on a weekly, annual, quarterly basis, however I want, saying these are the inputs, this is how much time and effort, or how much money is going into this property and how much money is coming out of this property. So I could really figure out on a monthly basis how much cash flow each property was creating over time, which is one of the things that we do when we run our numbers. You're like, oh, okay, we're going to get $100 a door on this property, or we're going to get this, but that's a pro forma, and we rarely go back and actually look in our rearview mirror and see how is this property's actually performing. And you find that there's like a bell curve. Like most of them are kind of average. There's a few that are excellent, and there are a few that are terrible. So I just started chopping off the ones that are terrible and selling them. And that was, so I looked the numbers based on performance. And then I also took a little bit of analysis on how much time was I spending on them. Mm-hmm. If I had a tenant I've had 3 turnovers in the last 2 years, something's going on. Either my management was bad, it's a bad property, bad neighborhood, something. And if it had, and then this ladder, this like Venn diagram, if a Venn diagram of how much equity is in the property. And if there was a decent amount of equity in the property and it didn't have a really nice loan on it, it was just some commercial loan, then I could sell that property off and then maximize my portfolio by basically cutting off the duds.
Excellent. I think every single one of us maybe envisioned doing this 5 years from now, maybe 10 years from now, but with the interest rates kind of the way they are, this conversation I think is happening now, right. And this is a lot more people are doing this. Okay, so we've gotten to where we're thinning the crowd. Yep. Now you've gotten to the ones that you want to keep. What are you doing next to increase efficiency for your portfolio? Well, I think we should say first that you're spending how many hours a month now on your portfolio?
So good question. That's a good kind of segue. So at first I was managing them myself, and part of the analysis that I did is that I was paying myself not very much money to manage my own properties. And so if you look at the value of your time and the other things I could be doing, and the things I want to be doing, for one, is not managing properties. So I actually hired a property manager, and the property manager helped keep consistency and the same type of lease, and I would be able to consistently raise rents because I'm a terrible landlord. It's like I'm too nice of a guy, I think, sometimes. And I wanted it to be consistent to where we would read the market and we would rent the property for the going market rate. There's kind of a range, and you kind of figure out what's a fair, reasonable market rate. And it's very common for self-managed landlords to not raise rents very much, even though your expenses are going up. So the value that you're exacting out of these properties is becoming less and less. So you get this diminishing return that you don't really see unless you have kind of a third party come and say, you know what, you could rent these things for much higher. How many of us have gone and bought properties from older landlords who just never raised rents? I don't want to be that landlord 10 years from now, right? So the original question I think you asked there was, how much time was I spending? So I was spending, prior to managing myself, 10, 15 hours a week managing properties. And I didn't enjoy that at all. And so when I delegated it out and put all my properties to a property manager, then after everything settled, which took a little while, after everything settled, I now spend 3 hours on the tie-in a month on my properties. So I really only spend my time talking to my property manager and my bookkeeper about my properties. So I'm just making sure I'm filing taxes correctly. I'm making sure that I'm answering questions about a few repairs, and that's it.
Excellent. Okay, so very, very little time, truly leaning towards passive income, right? Which I think is important to note that it's a process to get it there.
It is,
but it can get there. But you've had to force yourself to get there by releasing a lot of reins, right? At least releasing a lot of control. And finally getting rid of some of those troublesome properties that would have caused you issue. And now you've got an efficiently performing portfolio. Now, you and I talked before about your trick here and I thought was brilliant, to mitigating the vacancy, the long vacancies. Why don't you share a little bit about how you were doing that before? I think that's a great tip that someone might want to hear.
Yeah, this is something that I learned from a conference that I went to, but basically this idea of looking at a renewal of rent when a lease is coming up as a anniversary date. So I don't expect the tenant to leave when the lease is up. I expect them to stay. And one of the options that we offer is basically saying, okay, 60 days ahead of time, your anniversary date is coming up, and then giving them a pre-selected list of 3 bonus improvements that they get to pick one of. So this might be like installing new ceiling fan. This might be changing the floor out in one of the rooms. This might be upgrading one of the, if it has window units for sort of reason, then maybe putting updated window unit that's cleaner and not as noisy. Just something that costs you something between $100 and $200 that you can do an improvement that you would probably do the house anyway. If they moved out, you're going to do at least that much anyway. So go ahead and do it while they're there, and you're giving them as a perk, and they get to choose one of the 3 that makes the most sense to them. That gives them some agency over their property, and it removes this oftentimes difficult relationship that landlords and tenants have with each other.
Yeah, and you're doing that about 3 months before the lease?
60 to 90 days. I experimented a few different ones. 90 days sometimes was a little too early. I found that 60 days was probably the sweet spot.
Okay, 60 days beforehand, kind of preempting them that, hey, your lease renewal is coming up, and then presenting it as a wonderful opportunity to now where you get the annual upgrade in the home, and, and keeping that in the 200. I know some people that I've even shared that with are like, I can't afford to repaint the home every year. And I think it's important to note that it's not necessarily so much the amount that you're putting into it. It's that you're partnering with your tenant to kind of give them some ownership in that property of thinking, well, I was able to get a new ceiling fan or whatever the case may be, that really gives them personalization. So they take care of your property. I think that's the bottom line there. And then avoiding that kind of squandary at the last second to re-sign the lease is incredible.
Right. And part of the pitch of this is like, recently rent is probably going to go up 3, 5, 8%. But you do that along with, we're going to do some things for you at the same time. Right. And we explain taxes have gone up. Our costs have gone up. I know you're feeling the squeeze. We're doing everything we can to make this manageable. Here's an extra perk to make this better. And by the way, preemptively telling them you can't get the same property for, $1,200 someplace else. You're going from $1,000 to $1,050. This same unit would rent for $1,200 if you went someplace else.
And the moving expenses and the stress on the people too. That's a huge thing that people forget about when you got to pack up everything. It's exhausting. So to be able to stay there too, that's wonderful. And then you're shoving that obligation back to really where it belongs, which is, again, the taxes are increasing. The insurance is going up each and every year. The maintenance costs, the repair and all that stuff. You're trying to even that out. Talk a little bit about where you find, because your market is similar to ours. What is your annual, are you raising rents every year or every couple of years, or how are you doing that, and by what amount?
Yeah, usually we're looking at 3 to 5%. That not looking at the data, that's just kind of our default approach. But then before we do that, we look at the actual response time, we look at the actual reality of the marketplace, what's happening. And in recent years, like that would have been a small increase, whereas 3, 4 years ago, that might have been a very big increase depending on what was going on. So you definitely want to read the market and stay within parity of what's happening in the market. But like, we're in the business to make money. This is not a charitable outfit for us. So we're looking to make sure that our margins stay the same.
Wow. Now you've done another thing, which is what you've dubbed midterm Airbnb. Would you explain a little bit about how that's working? That's another idea that you're kind of bringing on the table for folks that they might be really interested in. Yeah,
so this is kind of like what I just talked about before, is just playing a really good game of chess. So this is talking about playing a game of checkers. I'm sorry, I said this all backwards. What I said before is playing a really good game of checkers. What I'm talking about now is playing a really good game of chess. It's like the next level. So
with your existing portfolio, so you got your existing portfolio, you sold off the ones that are not performing as well. We've got the ones that we've retained, and now he's going to tinker even further.
Yeah, we're tinkering. That's a good word for it. That's a good word for it. Tinker.
And this next idea is pretty cool.
And that idea was how can I get more return out of my existing portfolio? I'm not buying new properties. Well, what I've come to find is that there is a demand for traveling nurses, traveling professionals, but nurses being the 80% of the marketplace, for corporate travel is becoming a growing demand and a growing need, and there isn't new supply coming on very much. And I always thought about running an Airbnb, but I kind of wondered if I wanted to fuss with the difficulty of getting it furnished. And I wanted to, I wanted to fuss with just this constant turnover every 2 or 3 days and then having it cleaned. So a midterm rental is when you're renting a furnished property for 30 days or longer to a traveling professional. And it happens to be a happy medium between a traditional long-term where it's not furnished versus a short-term or Airbnb. And we still market it through Airbnb. We just market it as a traveling nurse stay 30 days or longer. And that's typically plenty of time because usually traveling nurses have a 12 or 13 week shift that or a contract that they sign up for. And so they'll sign up for 30 days. They decide they like it, and then they extend for another 30 days or another 6 weeks or something.
Now, you mentioned the hassle of furnishing. I know I can hear folks, saying, I got to go out and buy all this furniture. What am I going to do with it? How much does it cost? And you really done all the hard work on that to kind of get us some clean metrics on that. Talk a little bit about staging it, what you learned, what you wouldn't do again, what you would do again, and furniture for your rentals.
So this is, I will not sugarcoat the idea that furnishing a property is not a lot of work. It is a lot of work. No matter what you do, it's a lot more work than just getting a property rehabbed and it's empty and it's ready for a long-term rental. So for a midterm rental, you want it to look nice, and you have to do everything like down to the forks and the sheets and everything, right? But you don't have to have an Airbnb that has this pop or sizzle effect in quite the same way as a short-term rental, because these are traveling nurses. So the best way I know to describe this is think rice cooker over coffee bar. So if someone's going to live there for a while, they're going to cook in the house. They want functional, clean, safe. They don't need a fancy stoplight feature for that's hanging over the dining room or something, right? They don't need all these fancy, cool, really neat things that we often go to Airbnbs for, right? This is a different clientele. They want it to work, and your competition is the local
extended stays and
exactly. Yeah, and those things are terrible. Have you ever been to one of those things? They are miserable.
They smell horrible too.
Yeah, I mean they get a lot of wear and tear. And then for whatever reason, they're not cared for. I think it's a big gap in the marketplace because we find that the wear and tear on our properties is actually not that bad, especially if you don't allow pets. The people tend to be pretty decent with taking care of the properties. And so they're turning over probably every 3 or 4 months versus every 2 or 3 days. So that's the difference in the management headache.
Wow. And what's been, just give me a rough estimate on the cost someone can expect to put furniture in a single family home. I think you've done 2 bedrooms? Did you do 3 bedrooms, or you like to do those 2 bedrooms?
So I did, I have 3 units total that I've done, and one was a duplex, each was a 2-1. And then I also did a 3-bedroom, 2-bath, 2-car garage. So it's a full house, 1,700 square feet. It's a good size house. And that's probably a little too big for this. That's about as max size as I would go for this particular strategy. You really want the smaller properties that are conveniently located to someplace to work. But I think we spent right at $15,000 to furnish a 3-bedroom, 2-bath. So it's not cheap. And we've learned a little bit, and we could pare that down, but you're going to spend between $12,000 and $15,000.
But if you run the numbers right and you're compounding that with selling off the properties that aren't working right, you could foreseeably see the average portfolio, those properties that they're selling off, probably they're getting some money, right? And you could immediately take that cash and then you could dump it into furniture and getting your other rentals ready for this midterm rental. Now you sounds like you've done maybe 2 or 3 this way.
Yep. Mm-hmm.
Okay.
I've done 3
relatively small percentage. You don't want to overwhelm yourself, and then the rest you taker down. Is there anything else that you have recommendations of that you could think of that maybe somebody might not think about that's kind of on the back end as well, and thinking, how can I make my portfolio operate more efficient?
Yeah. So we've covered, I think, the big mechanisms.
Yep.
But one thing to think about would be reevaluating your financing. So right now, you may not be able to get really competitive rates if you have the 30-year fixed, 5%. Like that's an asset, so keep those in place. But you might have owner financing if you've listened to any of these of us gurus out here talking about stuff. We've been talking about creative financing for years, and you may have creative financing properties, but you want to sell it, and you have an owner financing situation, but you want to keep the financing but not the house. You can walk your mortgage to another property. A lot of people don't realize that. Yeah, it's called, basically you just reassign the collateral. So you have to get approval from the lender, but this is usually somebody that you've known and been paying consistently for the last 5-10 years. And you say, hey, I want to keep the loan, but I'm selling the property. Can I give this other property that I have over here that's free and clear, that's a nicer property as collateral, and keep paying you the same? Is there a problem with that? And they don't always say yes, but they could. And that's a way to keep really nice owner financing terms on a different property.
Interesting. That raises so many questions on IRS, how are they seeing the sale of that property? But technically, I guess since the loan's not getting repaid to the seller, he's not getting hit with capital gains taxes on that. I was like, wow, yeah, there's some interesting, that's a whole separate podcast right there. I won't even begin to get into that one. But just in closing here, I think we've covered the real huge, they're small, simple stuff, but I think they're so big for especially the portfolio owners that you just think you got it all, but really you're probably micromanaging. You're probably over managing your repair guys, and it's probably pretty stressful for you. And now's the time to really awaken to you don't have to be living that life. He made a decision to go from 15 hours a week to less than 5 hours a month now, but he had to make that decision. You had to make that decision. And each one of us sometimes has to get to that point where we decide, what is my priority? And once you do that, then you can implement these steps in place. But it all starts with identifying first which ones aren't performing right, and then being willing to let those go, right? And condense down to something that you can dish off to somebody that's a little bit more easier to manage. And I think that's where the real core of what you just said is that they were complex to manage. You eliminated those. You got your portfolio streamlined, and then now you felt comfortable handing it off to a property manager to then be able to enjoy the benefits of owning a portfolio and having mailbox money now.
Mm-hmm. Nailed it.
Thanks for coming on the show today. We'll have you on every once in a while. You've always got such down-to-earth ideas, and you're just real, and I love it. Could you share a little bit about if folks want to get a hold of you or pick your brain or talk about your new projects, how can they talk with you?
Sure thing. So the best way to find me is pauldavidthompson.com. And that's probably the way you'd expect those names to be spelled. Paul David Thompson, I'm sure you put in the show notes. And also, that's where I am on most social medias. And what I'll also do is I'll provide a link to you, Landon, that you can put in the show notes that actually has our breakdown of all of the items and where we buy them from. For if somebody wants the option of just shopping around, is this something I could do for one of my units? We've done the hard work of getting the pick list for you. Now you're just going to go buy it.
Thanks for listening to episode 121 of the Oklahoma Real Estate Show. If you're thinking about buying or selling in Oklahoma City or the surrounding area, there is a link below to begin your search and get in contact with me. If you've got some ugly ducklings in your portfolio and you need to sell them, I am the agent for you. You can get in touch with me in the description down below or visit oklahomarealestateshow.com.